Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Let's keep up with the euro currency analysis. So we have the long discussion on our weekly report concerning the longer term perspective, what to expect, and really what could happen on euro currency in longer term period. Because in recent week it was really dramatic news. So the first is the Fed Reserve statement that they do not plan to increase the rate in this year. Later is the production in Germany was really poor, and currently it seems that European Central Bank stands in trap because the pace of the gross domestic product stands near the zero, very close to the stagnation and recession. At the same time, they have no tools to manipulate with interest rate because it already stands at the zero compared to the Fed Reserve. The Fed still has some room to decrease interest rate if it will be necessary. So all the stuff have made a really significant impact on the market. And you can see in last week it was big collapse when the data in the European Union has been released. So euro just dropped lower, and currently it's a bit really the challenge to make the more or less longer term analysis on the euro currency. If you remember, in the shorter term, we talked about two potential patterns. The first pattern suggests retracement here, or even upward continuation, but I would say that after this kind of the plunge, the upward continuation could follow only by some external driving factor. So from the technical point of view, I do not see real power on the market to proceed upward direction. So for me, it looks more like the bearish reversal, mostly because after the reversal swing, guys, market has dropped below intraday confluence in the trend line and has dropped it, breaking it back, and returns back in the consolidation. This is not good sign from the technical point of view, and it means that from the technical point of view, the downward continuation looks more probable. I wouldn't say that it will be definitely the downward breakout here, and market will starting to collapse lower. Well, this perspective is not clear yet, but at least based on this sharp reversal that we've got on Thursday, on the last week, this really gives the hint that at least some continuation here should happen. Because to reestablish upward action in the current circumstance, well, it will be really difficult. Second pattern that we talked about is the bread body look-alike pattern, because here we have thrust up. Market has reached the 618 support with the close below the 3x3 moving average, and potentially this creates the bread body setup. But for the bread body, it has some real tricky moment. So this too deep retracement compares to the thrust. So thrust itself very small, so it's just has the minimal requirement number of bars, and retracement has happened very fast. So that's create a kind of the bread body look-alike pattern rather than clear bread body. And I would suggest that if you even intend to trade it, it's better to use closer target for bread body, not the 618 resistance as we usually do, but 30%, just 30% retracement target. So here is how it looked like on the follow template chart. So recall what we said in our weekly report. That was at this moment we said if you would like to take the position, you could do this, because in general, market has the background for the trade. We have the bread body setup. Market stands at the agreement around 618 support, because you can see this ABC top equal CD pattern has been hit. OP target creates an agreement with the FIB support. We have got this triple to buy. Yes, ABCD is too steep, but at least some minor retracement still possible. So if you would like to take the trade, you could do this, but it would be better if you will move stops to the break even as soon as market will pass 25-30 pips. So that has happened. So if you have taken trade, you probably should be should happy with this, because market has moved up. Now you could move your steps to the break even and just see what will happen. If some extraordinary factor and external factor will happen, maybe some Brexit news will be released, maybe something else, and you're jump, so you still will have the position for that. If not, you could turn just overall situation to the break-even trade. That's also possible. Because here, guys, you can see also the minor grabber has been formed. It's bearish grabber. It suggests the drop below these lows. So the overall setup for the bread body starts to work. Market even has shown the pullback, but final result of the bread body is unclear, just because of the nuances that we have just talked about. So 30%, yes, it could reach probably, but it's difficult to count on something more. It means that potentially we're watching for downward continuation, and from that standpoint, market really could continue to the XOP target. In this case, our regardless triple to buy after minor reaction could shift to bad pattern. So as you know, the bad is in fact the same as the regardless triple to pattern, but market hits usually not the 618 minor support, but 88 support, this deep fib level. And you can see that this level stands in agreement with the XOP targets very close to it. It's 12.08 and 12.19, so just 10 pips difference between them. On the hourly chart, I suggest that we could keep an eye on this level. It's not the fact, of course, that it will be hit, but if it will happen, that will be a very good point for taking the short position. So we also have mentioned in our weekly report, because our upward action has started, we were correct on the possible hand-shoulders shape. Indeed, this kind of hand-shoulders shape has been formed. The ABCD target, the XOP, stands right here, 1335. That's also confidence resistance on the hourly chart, weekly pivot point, the natural support resistance area. So that's a very good opportunity for taking the short position. And from that standpoint, it would be perfect if market will hit it. So if you would like to take the short position, you could keep an eye either on this level, or if market will definitely will start dropping here, well, maybe it makes sense trying to take the position on minor retracement. But currently it's difficult to to tell it definitely, because we need to see how this will happen, in what manner market will continue to move lower. Simultaneously, that will be the point where you could think about taking the profit if you're holding right now a long position based on the bread and butter trade, because that's the logical destination for the bread and butter, or at least you could grab the half of profit and move stops to the break even on tight stop for another half and see what will happen. So that's the patterns that we will keep an eye on in euro currency. So bulls could keep the longs and wait for the market hit this area, but move stops to the break even right now. Bears should wait for either completion of this multiple target cluster, so XOP, confluence, weekly pivot point for taking the short position, or we could see for example, if we will see clear downside acceleration, maybe it makes sense to take an attempt to enter on some minor retracement, and then the next target of the downside will be XOP first, and later we will see what to expect next.